Welcome traders to Polaris Trading Group. In conjunction with our partner NinjaTrader, we're happy to announce the release of the PTG ATA, which stands for Auto Trade Assistant, for the NinjaTrader platform. The official release date will be December 1st, 2015. Before we get to the video, regulations require that we highlight the risk associated with trading, and that hypothetical performance results may have many inherent limitations, and some of which are described below here in NFA Compliance Rule 2-29. And trading in futures and options on derivatives is speculative in nature and involves substantial risk, and you should carefully consider whether trading is suitable for you in light of your circumstances, and past performance is not indicative of future results. So with that said, let's just get right to some of the highlights and features of the new ATA Auto Trade Assistant tool for the NinjaTrader platform. And in the list here, we've just highlighted some of the main features and highlights here. One is a built-in position sizing algorithm, which helps keep our risk uniform across multiple trades. And the risk is defined by the user, either using a percentage of account size for some of the larger account traders out there, or by a specific dollar amount. The entry, which is auto-executed based upon specific objective market structure criteria. So what this does is we have outlined a specific criteria that which we look for our entries, and the auto trade tool will scan for that criteria, and once that criteria is true, it will execute the trade. Stop loss, all right, which is really important. It's determined again on a preset criteria, which is simply 1R value, and that value is determined by the trader in the input fields ahead of time. So we'll make sure that that we know exactly what our stop loss is going to be, and it auto calculates it as well. Now the targets are based upon risk unit value, or also known as R value. So we have 4 targets that we look for once we've entered. Number 1 is the 1R level, which is simply risk-free. So as an example, if we were risking 8 ticks per trade, the risk-free point would be plus 8 ticks. So once we get to that risk-free point, then the trade is considered a successful trade, and we have the ability to at least pull 1 risk unit or 1R value out of the trade setup. Now, we certainly want to go beyond that 1R value, and so we have targets that are based upon R values. So R2 is target 1, T1. All right, R3 is target 2, T2, and R4 target 3, T3. So now, whether you're a single contract trader or a multiple contract trader, this tool definitely can be useful for you in all types. So let's just get right to the charts, and we'll show. We've already have a predetermined demo for you to demonstrate the tool, and we'll go over that in just a moment. Okay, so what we're going to do here is we've set up a chart of the S&P E-mini, and on this we're on a 750 tick chart, but if you're a range chart trader, it will work certainly on a range chart, a volume chart. So but in this example will be a 750 tick chart. So let's set up the scenario for you. Now what happened here is price had been in a downtrend, reached the low support point. All right, we got an ATR shift, which is what we call our point break, and then price proceeded to move higher to a 200 extreme buy signal. So at this point, the market has shifted bullish. We've set up an opportunity where now we want to be looking for pullbacks, all right, in a new potential developing trend up. And so over here we're going to shift over to the buy mode, and then we're going to have the ATA scan for our discount setups, we'll enable it, and we'll let the tool do its job. So before we do that, though, let's just quickly, what we want to do is, we currently on the top left hand corner here, this is our status box. Currently it's disabled, so we're going to have to enable that. In our example here today, we're using a $500 maximum risk. Now again, that is user definable, so if your risk comfort level is not 500, you can certainly reduce that, but we want to show various executions today on multiple contracts in our demonstration, so we've set it to $500. All right. There's two modes. There's dynamic turbo mode and dynamic standard mode. That's more explained in our educational material on the tool, but simply dynamic turbo mode is a little bit faster mode, and it searches for discounts or premiums, right, that meet certain criteria in the turbo. Now the stop entry, we have two types of styles of entry. One is a buy or sell stop, which again turns into a market order, or a market order. So we only use market type orders. We don't use limit orders to enter the trade. All right, so now what we want to do here is we want to enable the tool. So we're going to go right click, and we want to enable buy only here in the menu. And simply because we want to be looking to buy pullbacks. So once we click on buy only, you'll notice that a disclaimer box, standard disclaimer box comes up, and we're just going to, you can certainly read through that, and we can click OK. And now we're set to enable buy only. Now this will only take trades in direction of a developing up move. So we're only going to be looking for buy trades on pullbacks, i.e. discounts, and it will not counter trend trade. So with that, we've set the, this is November 24th, and we're approximately a little after 11 o'clock a.m. All right, and it's a good example because the following move did produce a nice trend type up day on the S&P 500. So that is going to be where the auto trade assistant is going to be most useful for, is when we're in trending type modes. So let's start the simulation, and we'll adjust the speed as necessary. Okay, we're going to increase our speed here. Here we go. Now the tool is beginning to work. Okay, so as prices have moved up a little bit, we want to be, again, we have the auto trade on that's scanning for our discounts. Okay, so let me just adjust the tool just a little bit. Okay, and as price pulls back here, you can see that white alert bar beginning to form. There's our signal for a discount. All right, and there's, we're going to be staging an order. There we go. Okay, let me just pause this for the moment. Now what happened here is, as price pulled back down, it started identifying criteria for our discount, and it gave us our text alerts as well as a white alert bar on a black background here. And then what it does is it pre-stages the order. So it executes, it executed here, looks like 4 contracts at 74.25, and it initially placed the stop down below the low. And then as price reaches the risk-free level, okay, as you'll see here, it sold 2 contracts out at the 74.50s. Okay, so it got risk-free. And then we have what's called an auto break-even feature. So the auto break-even, once we're at the risk-free point, all right, the trailing stop, the initial stop, is moved to the entry point. And the entry point here, as you can see, 72.75. And then now it stages scale-out orders on the balance. So we have contracts look to scale out, right, on the balance. So let's just run the simulation. And what we'll do here is we're just going to let the simulation run.
Order filled.
Okay, there's an exit.
Order filled.
Okay, and there's a final exit. So on this particular setup, all right, it's scaled out. Now this is the ideal situation where we like to use our auto trade. So again, the problem for many traders is getting into the trade. Okay, at what point should we get in? Many people, traders, hesitate. Again, all we need to do is know what side of the trade that we want to be trading from, long or short, enable the tool, let the tool do the job automatically. This is run in NinjaTrader as a strategy. Okay, in this case we bought a total of 6 units, right? And once the trade is complete, there's the summary of it. Okay, 6 units, 72.75. We scaled out of 2 at 74.75 and scaled out of 2 more at target 1, which is 2R value, and target 2, which is 3R value. All right, so now what we're going to do is we're going to let the computer run a little bit, and we'll let you watch some of the additional setups that come about here. Now the market did produce a trend type condition on this particular session, so we will. That's the anatomy of how the auto trade works, and let's just let it run a little bit and catch a couple other trades. So now the prices are moving up and it's scanning for the next setup. Automatically we have it in continuous mode, looking for to buy the next opportunity on a pullback. Okay, and until the criteria is met, it won't do anything. Now it will not counter trend trade, as I said. All right, we have a trailing stop up here, which we can use as our one of our management tools. Okay, now it's searching again for the next opportunity, so it needs a little bit of a pullback. You can see there we go.
Order filled.
There we go. It's staged in order. Okay. Executed, looks like 5 contracts here. And as you can see, the scale out is at risk-free 2 contracts. There's your initial stop point. And we have target 1 and target 2 set up. Now, once we're in a trade, you notice there's a new signal here. All right, once we're in a trade, it won't take another signal until the sequence is complete. There we got risk-free. Now notice again right here, once we got risk-free, the stop moved, okay, from the lower pivot point up to the entry point at 2080. So on 3 contracts. So we sold 2 out of 5, left 3, and we got 2 staged orders up above for the scale out. So let's see what happens here on the balance. Now, of course, if price pulls back here, it will get stopped out, but at a break-even point, and it still is a successful trade. So at this point, all right, it's working to move higher. We'll see if we can get our target 1 and target 2. Let me just adjust the speed a little bit on the replay.
Order filled.
Okay, so target 1 is hit. All right, now at this point, let me pause this. At this point, what you can do here is if you want to manage the balance of that 1 contract, your choice will be to leave it at the break-even point. But if you want to use the trailing stop feature here, what you can simply do is take the line and drag it up. Okay, real simple to do. All right, and we'll just drag it up just a little bit. All right, to demonstrate that you can move the stop anywhere you want. All right, as a trailing, you can do the same thing for the target if you want to try to have a runner go beyond target 2. Let's continue the simulation here. And what I've done here with that stop, I've kept it right around that ATR stop level. Okay, now a new discount is forming. Again, we're still in a prior setup, so that we'll not take that discount until the sequence of this particular trade is complete. You can certainly take it manually if you want. If you wanted a pyramid and add to your position, But at this point, we're still in that trade until we get either stopped out here.
Order filled.
There we go. And we did get stopped out. So at this point, very successful trade. All right, using our management tool, our ATR stop, to help keep us into the trade as far as we can. And that's it. So we're releasing this officially on December 1st, the PTG Auto Trade Assistant. It is run as a strategy within the NinjaTrader platform. So if you're interested in the tool for NinjaTrader, for additional information, please contact me at 203-599-1544. Or actually, the fastest way is to reach me is through the email system, david@polaristradinggroup.com. Also, visit us at www.polaristradinggroup.com and come on in, sign up for a free trial, come take a look at what we do. And we'll be demonstrating NinjaTrader as well as the other platforms that we use throughout the course of the session. Thanks very much for your attention, and good trading to everyone.